Can this SME IPO deliver gains or should you skip it? Let's find out. Hello everyone, welcome back. Today we are reviewing the NFP Sampoorna Foods IPO. This IPO opens for subscription on 4th Feb and closes on 6th Feb 2026 and listing on 11th Feb on the NSE SME platform. The issue is a 100% fresh issue, no offer for sale, priced in the range of Rs 52 to 55 per share and aims to raise around Rs 24.53 crores. Each lot is 2,000 shares, so retail investors will need to apply for a minimum of Rs 2.20 lakh. In this video, we'll break down the company's business, financials, peer comparison, risks, and give a verdict on whether you should apply or avoid this IPO. NFP Sampoorna Foods is a food processing and trading company primarily engaged in dry fruits and healthy food products like cashews, almonds, walnuts, and makhana. The company operates through B2B, B2C, and institutional channels, catering to steady demand in the consumption segment. Coming to the IPO objectives, this is a 100% fresh issue and the funds raised will be mainly used for working capital requirements, repayment or prepayment of borrowings, and general corporate purposes. Overall, the IPO aims to strengthen the balance sheet and support the company's future growth plans. Let's now look at the financial performance of NFP Sampoorna Foods. The company has reported strong revenue growth, with revenue increasing from around Rs 16.7 crores in FY23 to Rs 23.3 crores in FY24 and further to about Rs 38.8 crores in FY25. H1 FY26 ASH revenue has already reached nearly Rs 37 crores, indicating good business momentum. In terms of profitability, PAT has improved steadily from Rs 0.41 crore in FY23 to Rs 1.02 crore in FY24 and then to around Rs 2.67 crore in FY25. H1 FY26 PAT stands at approximately Rs 3.49 crore. Importantly, the profits appear to be supported by actual business growth rather than aggressive accounting practices, which is a positive sign for investors. On the debt side, borrowings came down in FY24 but increased again in H1 FY26, largely due to higher working capital requirements. Overall, the numbers show healthy growth while debt and working capital efficiency remain key areas to track.
When we compare NFP Sampoorna Foods with peers like Pajson, Agro India and Prospect Consumer Products, the first thing to note is valuation. NFP Sampoorna at a post-IPO PE of around 14 is priced lower than peers trading in the 17 to 18 times range. In terms of ROE, NFP shows strong numbers due to improving profitability, though it operates at a much smaller scale. However, operating margins are lower than peers, reflecting its SME size and trading-led business model. Overall, NFP Sampoorna offers a lower valuation with higher risk, while peers benefit from better scale and margin stability. Let's now look at the strengths and risks of NFP Sampoorna Foods. Starting with the strengths, the company has shown strong growth in revenue and profits over the last few years. It operates in the dry fruits and healthy foods segment, which has relatively steady demand. The IPO is also a 100% fresh issue, meaning the funds raised will be used directly for business needs, mainly working capital and balance sheet strengthening. Additionally, the company's profitability growth appears to be driven by actual business expansion rather than aggressive accounting, which is a positive sign. Now coming to the risks, NFP Sampoorna is still an SME scale company which limits pricing power and scalability compared to larger peers. A significant part of the business is trading-led, which can result in thin and volatile margins. Debt levels have also increased in the recent period due to higher working capital requirements. Lastly, since the stock will be listed on the SME platform, liquidity after listing could be limited. So overall, while the company shows growth potential, investors should carefully balance these strengths against the risks before making a decision. To sum up, NFP Sampoorna Foods IPO represents a growing SME food company with improving revenue and profitability operating in the dry fruits and healthy food segment. From a valuation standpoint, the IPO appears reasonably priced, and if market conditions remain favorable, there is a possibility of modest listing gains. However, listing performance will depend on factors such as anchor book strength, HNI and QIB participation, and overall market sentiment. From a long-term perspective, investors should remain cautious. The business is largely trading-led, operates with thin margins, and depends heavily on working capital and borrowings. Also, being an SME-listed stock, liquidity post-listing could be limited. So overall, this IPO may suit investors with a higher risk appetite, while conservative investors may prefer to wait and track performance after listing. Thank you.